All right, let's dive into the future of U.S. banking. We've got 3 articles to look at today.
Yeah, they all paint a pretty interesting picture of where things might be headed.
Some of it's even a little unsettling, you know? Like, remember walking into your local branch?
Oh, for sure.
That might be a thing of the past sooner than we think.
Yeah, it might be.
So we've got one article with Bob Diamond. He was the CEO at Barclays. He's talking about a wave of bank consolidation coming. Then there's this piece on all the bank branches closing down all over.
Yep.
And then to top it off, we've got Jamie Dimon.
CEO of JP Chase.
He's got some pretty strong opinions about all the new banking regulations.
Oh, yeah, he does.
So we're covering investment trends, changes in how people are banking, and even some drama with the regulators.
It's a lot to unpack, but it should be interesting.
For sure. Okay, let's start with Bob Diamond.
Okay.
He's saying that U.S. banking consolidation is like the big investment opportunity right now.
It is.
Why so bullish on consolidation?
Well, remember those smaller banks that failed last year?
Yeah.
That really shook things up. And when you combine that with the big 4 banks already being so big,
Right, they have so much influence.
yeah, it creates this perfect situation for mergers and acquisitions.
Interesting.
Like, imagine a game of Monopoly
Yeah, okay.
where the big players just keep buying up all the properties.
They end up controlling the whole board.
Exactly.
Nice.
So Diamond's thinking is that this consolidation is going to lead to a leaner, more efficient system
Okay,
with stronger banks that are more stable.
makes sense.
So that's why he sees it as such a good place for investors to be.
But, I mean, his firm, Atlas Merchant Capital, they're actively looking at opportunities in this consolidation game, right?
That's right. So it makes sense he'd be positive on it.
I guess so.
Yeah.
But doesn't this mean that people will have fewer choices for local banking?
Yeah, that is something we need to think about.
For sure.
Diamond thinks this wave of consolidation is going to play out over the next 2 to 4 years.
That's not that far off.
Nope. Oh, and he also mentioned the presidential election.
What? How does that fit in?
He said if a Republican wins, there might be fewer regulations across the board.
Okay.
Not just banking, but everything.
Huh.
So that could make it even easier for companies to merge and things to consolidate even faster.
Wow, so it really depends on who wins in November.
Yep, that's going to be a big factor.
All right, well, speaking of fewer choices, let's move on to this article about all the bank branches shutting down.
Yeah, it's a big one.
I do most of my banking online now, but I can't imagine never going into a branch again.
Right. I feel like there's a comfort in being able to go talk to someone face to face.
Yeah, exactly.
But the reality is these branches are closing at an alarming rate.
Really?
Over 700 have closed in the first 9 months of this year alone.
Wow.
And experts are saying we could see over 1,000 close by the end of the year.
That's a crazy number. Is it mostly one bank doing this, or is it all of them?
Pretty much all of them are doing it.
Wow.
Bank of America is leading the pack. They've closed 132. But U.S. Bank, Wells Fargo, Chase, and TD Bank are all closing a lot of branches too.
So it's really widespread.
Yeah, and it's not just one part of the country either. California and New York have been hit the hardest so far. But
So it could be happening anywhere.
exactly.
It makes you wonder if your local branch is on the chopping block.
Doesn't it?
It does, but I guess it makes sense with everyone moving to online and mobile banking.
That's a big part of it.
Yeah, I mean, when was the last time you actually went inside a bank to deposit a check?
It's been a while, I'll admit.
Me too.
But, you know, there are still times when I need to talk to someone in person.
Oh yeah, for sure.
Like if I need financial advice
Yeah,
or for more complex transactions, I still like to go in.
that makes sense.
And the interesting thing is, even with most everyday banking being done online now,
Okay.
almost 2/3 of Americans still use bank branches for cash deposits.
That many?
Yeah, and over half say they prefer face-to-face interaction when it comes to getting financial advice.
Wow, so it's not just about convenience then.
No, it's also about trust and being able to talk to an expert,
Right, so what about people who really rely on those branches?
like older people who might not be comfortable with online banking.
Yeah, or people in rural areas who might not have good internet access.
Exactly. Are their needs being considered in all this rush to go digital?
That's a good question. It's like a digital divide, but in banking.
I know, something to think about.
For sure. Well, that actually leads us perfectly into our last article for today.
The one with Jamie Dimon.
Yeah, he's really going after the regulators.
He is not holding back.
This should be good. But first, can we break down his main points? What is he so upset about?
Well, he's really critical of those Basel III capital requirements.
What are those?
They're rules that were put in place after the financial crisis.
Oh.
They basically force banks to keep a certain amount of money in reserve, like a safety net.
Okay, that makes sense. More capital means safer banks, right?
In theory, yes.
Yeah.
But DeMine's argument is that these requirements are way too burdensome, especially for the big banks. He says they're based on flawed calculations.
Oh, interesting.
And that they actually end up restricting lending and hurting the economy.
So he's saying these regulations, which were supposed to make banks safer, are actually making things worse.
That's his argument?
Wow, that's pretty bold. Is that all he's upset about?
No. He also takes issue with the Consumer Financial Protection Bureau's proposed open banking rules.
Okay, back up for a second. What is open banking?
Basically, it's about giving people more control over their financial data.
Okay.
So they can easily share that data with other apps and services, which could lead to more personalized financial products and better deals.
So it's like having one platform for all your finances, even if you have accounts at different banks.
Yeah, exactly.
I mean, that sounds pretty convenient, so why is Diamond against it?
His worry is that these rules could actually make people's data less secure.
Less secure?
Yeah, he's saying that giving more access to financial data could lead to more fraud and identity theft.
I see, so it's a trade-off.
It is.
So what does he want to do about all this? Just complain?
He's hinted that JP Morgan might fight these regulations in court.
Really?
He's even used phrases like fight back and saying the current regulatory environment is unfair and unjust.
Wow, sounds like there's a real power struggle going on here.
For sure.
Between the big banks and the regulators.
And we're all caught in the middle trying to make sense of it.
Exactly. So where does this leave us?
That's a great question, and it's one we'll be exploring in part 2 of this deep dive.
So much to consider. We'll be right back.
Welcome back. You know, it's interesting. All these banking trends we've been talking about, it's like this tug of war between like efficiency and technology pushing for these huge banks and everyone going digital. But then you have this need for that personal touch.
I know what you mean.
Like people want those relationships.
Yeah.
And not everyone can or wants to go digital.
For sure.
It's happening everywhere, not just in banking.
That's true. Like, think about retail.
Okay.
Online shopping is so convenient, but people still want those brick and mortar stores.
It's interesting.
Maybe it's nostalgia, or maybe it's just human nature.
Could be.
Who knows? But let's get back to banking.
Okay.
What if all these changes, even the ones that seem kind of scary, actually end up being good for us in the long run?
That's an interesting way to look at it.
I mean, let's play devil's advocate here.
Okay, I like it.
Like consolidation.
Right.
Fewer choices might not sound good at first.
Right.
But maybe it leads to bigger banks that are more stable financially.
That's possible.
Maybe they're better at handling those economic downturns.
Yeah.
So our money is actually safer.
It could be.
And maybe they can offer more different products and services because they're so big.
That's a possibility.
Okay, so I see how consolidation could have some good points. Bigger institutions that are more stable, more options for loans and investments, that kind of thing.
Yeah.
But what about the branch closures? It's hard to see that as a good thing for everyone.
True.
Some people really rely on those branches.
Yeah.
So how is that good?
Well, think about it this way.
Okay.
If banks are saving money by closing branches, maybe they can pass those savings on to us.
Oh, I see.
Lower fees, better interest rates on savings accounts.
Yeah, that'd be nice.
Right. So maybe it's like trading convenience for financial benefits.
I like saving money,
Me too.
but it still feels like something is lost.
I know.
You know, when those relationships disappear,
It's not the same.
what happens to people who need those relationships?
Right, or who just aren't ready to do all their banking online.
Exactly.
That's a really important point.
It is.
We can't just assume everyone is ready to go fully digital.
Not everyone is.
As banking changes, we need to make sure those people aren't left behind.
Absolutely.
The ones without good internet access,
Right.
or who just prefer to talk to someone face to face.
Yeah, maybe banks need to get creative.
I think so.
Like mobile banking units,
That's interesting.
or partnerships with community centers.
I like that.
Or even just having staff who can help people learn how to bank online.
Those are all good ideas.
It's like bridging the gap between the high tech and the human touch.
That's a great way to put it.
It reminds me of libraries.
Oh, yeah.
They're still about books, But now they also offer computers and tech support for people.
They've adapted.
Exactly.
Yeah.
But before we move on,
Yeah.
we can't forget about Jamie Dimon.
He's got some strong opinions.
He does. And even though he runs a huge bank,
One of the biggest.
his concerns about too much regulation are worth thinking about.
I agree.
It's all about finding the right balance, isn't it?
That's the key.
Protecting consumers,
Yeah.
but also letting banks do their job.
And make a profit.
Right. They are businesses, after all.
Too much regulation and you stifle innovation.
And maybe even hurt the economy, like Dimon says.
Possibly.
But too little regulation, and, well,
We've seen what can happen.
2008 was a pretty big reminder.
Oh, really?
It's a delicate balance.
Is it?
So, more regulation, less regulation, or somewhere in the middle?
Honestly, there's no easy answer.
I agree.
It's complicated. There are good arguments on both sides.
That's true.
The important thing is that we stay informed.
We need to know what's going on.
Understand how these regulations affect us, and then make our voices heard.
How do we do that?
Vote for candidates who support the policies we believe in.
Okay.
Support organizations that are fighting for those policies.
Right.
And even just contact our elected officials directly.
It all makes a difference.
It does.
Okay, so let's shift gears a little bit.
All right.
We've talked about community banks maybe disappearing.
Yeah.
What does the future hold for them?
It's a tough question.
They've always been so important to local economies.
They have.
But Dimon specifically said
Oh, yeah.
he sees those smaller banks as targets for consolidation.
He does.
So is that it for them?
Are they just going to get swallowed up by the giants?
Yeah.
Not necessarily.
There's hope.
There could be other possibilities.
Okay.
Maybe some community banks will merge with each other.
To get bigger.
Yeah, to become stronger regional players.
Interesting.
Or maybe they'll find niche markets where they can really thrive,
What do you mean?
like focusing on specific industries or demographics
Okay.
and offering a level of service that the big banks just can't match.
That makes sense.
It's about adaptation.
Right, like survival of the fittest.
Exactly. Community banks might have to evolve to survive in this new world.
It's exciting, but also kind of scary to think about.
I know.
How will it all play out?
That brings us back to the question we started with.
What kind of banking experience do we want?
Yeah, what do we actually want to see in the future?
Do we want a world with just a few huge banks?
Or do we want that diversity and local focus that community banks offer?
Do we want convenience and low fees above all else?
Or are we willing to pay a little more for personalized service and a connection with our bank?
It's a tough question.
It is.
There's no one answer for everyone.
That's true.
We all have different needs and priorities.
Right. Some people want convenience.
Others want that personal touch.
It's all about what's important to you.
I guess that's the beauty of a free market.
It is.
It can offer something for everyone.
Exactly. But that's why it's so important to be informed,
To know what's going on.
to understand the choices we're making.
Yeah, about where we bank and how we manage our money.
Absolutely.
You know what? That gives me a great idea for the last part of our deep dive.
Oh, yeah.
Let's give our listeners some concrete actions they can take
I love that.
to make sure their banking experience matches their values.
That's a great idea.
We've talked about the big picture.
Now let's make it personal.
Exactly. Stay tuned, listeners, because in part 3, we're going to give you a toolbox of strategies for navigating this crazy world of banking.
Can't wait.
Okay, so we've looked at all the big changes coming to banking.
Consolidation, branch closures, all that.
And all the back and forth about regulation.
Wow.
But now let's talk about what it means for you, the listener.
Yeah, how do you actually deal with all of this?
That's what we're here to figure out.
It's all about taking action.
So let's start with consolidation.
Right.
Should we be worried about the big banks just getting bigger and bigger?
I mean, it's natural to be concerned.
It is.
Less competition usually means fewer choices.
And maybe worse deals for us?
Possible.
But we also talked about how consolidation could lead to more stable banks.
Right, and maybe even a wider variety of services.
So what's a smart consumer to do?
Well, first, stay informed.
Okay.
Pay attention to any announcements from your bank.
Like those notices they send.
Exactly, the ones buried in the fine print.
I usually just skim those.
I know, but they're important.
Okay, so read the fine print.
And don't just accept whatever happens.
What else can we do?
Shop around.
You mean look at other banks?
Yeah, don't assume the biggest bank is the best for you.
Good point.
Compare what different banks offer, including smaller banks and credit unions.
I hadn't thought of that.
They might surprise you.
With better rates or something.
Yeah, or lower fees, or maybe they focus more on personal service.
All right, that's good advice. Now, what about the branches clay thing?
That's a tough one.
I've gotten used to banking online, but I still kind of miss going into a branch.
I get it.
And for some people, it's not just a preference, it's a necessity.
That's true.
So what if your branch is closing? What can you do?
Speak up.
Really? Would my bank actually listen?
You'd be surprised. Banks do care about what their customers think, especially when it comes to impacting a community.
Got it.
And remember, you're probably not the only one who's unhappy about it.
Right.
Join forces with other customers, talk to the local media, maybe even contact your elected officials.
So it's about making our voices heard together.
Exactly.
Okay, that makes sense. Now, what about this whole regulatory thing? It seems so complicated.
It is complicated.
How can we as regular people have any impact on that?
Well, remember, those regulations affect all of us.
I guess so.
They affect the interest rates you get, how safe your data is, all kinds of things.
Okay, yeah, that makes it more real.
So what can you do? Become a citizen advocate.
What does that mean?
Do your research on the candidates in the upcoming elections.
Okay.
Figure out where they stand on these issues.
Right.
Support organizations that are fighting for the policies you believe in.
All right.
And honestly, just contacting your representatives can make a difference.
Huh. I wouldn't have thought of that.
It's more powerful than you think.
So we really can do something.
You absolutely can.
It's not all just happening to us.
We have a say in how this all plays out.
That's good to know.
It is.
We've got so many options.
We do.
From shopping around for banks to getting involved in politics.
It's all about taking action.
Okay, so to wrap things up, let's leave everyone with one last thought.
I like it.
We talked about community banks maybe disappearing.
Right.
But what if that's not the only possibility?
What if they actually thrived?
That would be amazing.
Imagine them using technology to become even more focused on their communities, offering things that the big banks just can't.
I can see it. Maybe they become places where people go to learn about managing their money.
Yes, turning banking into something that helps people and builds stronger communities.
That's an inspiring thought.
It is.
So listeners, we challenge you to imagine that future.
To demand it.
And to be a part of making it happen.
We could do this.
Thanks for joining us on this deep dive into the future of banking. We'll see you next time.